Thank you for stopping to watch my video. We're going to start off with 3 very simple questions. Number 1, do you want to leave a legacy for future generations? Number 2, do you want to save taxes year after year, generations after generations? And the third question, do you want to know the secret of the rich? If you answered yes to all 3 questions, you're in the right location. So few people have ever heard of the Spendthrift Trust. I want to teach this to as many U.S. business owners, entrepreneurs, 1099 income earners, and U.S. investors how they can save taxes legally. The Spendthrift Trust is in the IRS Tax Code 643B. It's been in front of the United States Supreme Court on 2 separate occasions, and the Benson Financial Trust has never been audited. Paul Benson was a Harvard Law professor who wrote 5 separate trusts 76 years ago. Each trust saves certain taxes. You're not tax-free, you're saving very specific taxes. Now, to give you a bit of history, the Spendthrift Trust came into back when King Henry VIII in 1563, I might have the year wrong, if I do, I'm sorry, started the Church of England. Yep, that famous king who chopped off his wives' heads started the Church of England so he could divorce them. He went to go tax the lords and ladies of England, and they went further back to the Magna Carta, 13th century, and said, nope, you can't do that, King Henry VIII. It's contract law that came to the colonies while we were still part of England. Our current tax law went into effect February of 1913 and was supposed to be around for only several years. I don't know about your definition of several years, but 111 years later, the only thing that has happened is it's gotten bigger and bigger and bigger. Back in February of 1913, the super rich families, the Rockefellers, the DuPonts, the Carnegies, the Kennedys, made sure they could save taxes. Well, if they can save taxes, the rest of us should be able to save taxes. My personal story, so you know it, I became a real estate investor after my mom got sick. In 2000, started real estate investing in 2018. In 2019, I was working full-time as a Medicare broker, and I wholesaled 7 properties nationwide. I paid off $184,000 in debt, and I was completely debt-free. Woohoo! Sally was a rock star. I knew about capital gains. I had $50,000 sitting in my bank account, ready to pay my capital gains. Where I messed up was I didn't realize my tax bracket went from 22% to 24%. Instead of owning $50,000, I owed the federal government $97,000. I found out April of 2020. That's the start of COVID, and of my 6 notes, 3 of them stopped paying me April 1st. Yikes. Well, I took a HELOC out of my house, defeats the purpose of being paid off, paid my bill, and I spent 5 months researching the Spendthrift Trust. I had read an article about the Rockefellers Spendthrift Trust. It's called The Office. It's 7 generations old and has almost 400 people under the same EIN or employee identification number, their tax ID number. In September of 2020, I started both my business trust and my beneficial trust, and I also started teaching as first female mastermind in my real estate class in Phoenix. Very proud of that fact. Well, my Thinking into Results coach, Susan Ma, tasked me to find a new real estate group, to move and start a new company, and I did all this in March of 2022. So I formed the TrustIsYou.com to help U.S. business owners, entrepreneurs, 1099 income earners, and investors save taxes. I also have a free class online. It's my name, www.sallygimmon.com, where you can get a 23-minute presentation, 3 articles from Forbes magazine, 2 pages of case law, and a chart showing that if you file single and make $80,000 gross, how much you will save in all 50 states. So let's get into this. The Spendthrift Trust, Paul Benson wrote 5 different trusts, and all the trusts save you in 4 very important ways. Number 1, saves you taxes year after year, generation after generation. Number 2, your information is completely private. There's a false rumor out there your LLC, S Corp or C Corp keeps your information private. You can go online to the Secretary of State or the Corporation Commission of all 50 states and research LLCs, S Corps, and C Corps. Do you realize 40% of all LLCs get sued every single year? That's not private. Number 3, talking about lawsuits. All lawsuits become frivolous because all your assets are in the titanium vault of the Spendthrift Trust and no one can get a hold of them. And number 4, if you have the Benson Financial Trust, you're exempt from doing the 2024 Corporate Transparency Act from the Treasury Department. Please, if you don't have the trust, do the paperwork. Because if you don't, you could be fined $10,000 and or 2 years in jail. So the business trust is for U.S. business owners, entrepreneurs, and 1099 income earners. Today's example is a gentleman who saw one of my YouTube videos. He's an RV salesman in California. He makes about $200,000 a year. He files jointly at 22%. His wife's a stay-at-home mom with 2 young children. Federal taxes, we're going to save them $31,310 a year. And state taxes, $11,113 a year. So grand total in a full year, the two of them will save $42,423 per month. Because you're getting paid every month, you're going to be saving this money every month. He's going to save $3,535 every single month, not working harder, not working smarter, not working longer. They can use this money to pay off their mortgage, to buy a new car, take the family on vacation, to give to a charity, to save for retirement, or put it under the mattress, whatever they want to do. It's their money. If they can save that kind of money at $200,000, if you're making more than that, think how much you could be saving. I highly suggest someone making at least $80,000 should be looking at the trust. You might not save that much in the first year. My first property in the trust was an auction house. I paid $20,000 for it. It went to auction for over $64,000. I made $44,000 without lifting a hammer, and I saved $10,389 on that first property. That's the beneficial trust. So the beneficial trust is for U.S. investors. You'll save the following 5 taxes. You will no longer pay short-term or long-term capital gains. Short-term capital gains are between 10% to 37%, just like federal income taxes. So if you are a crypto investor, a forex investor, wholesaling, fix and flipping, doing tax liens or auction houses, depending on your tax bracket, that's what you'll pay. I use all my figures for myself at 24%. Long-term capital gains are either 15 or 20%, and if you're selling your business, selling investment property, or a baseball card. There's past legislation back in November 2021 that's, well, if you're making more than $300,000, you can start paying 40%, both short-term and long-term, on your profits. 40%. Yikes. Second tax you'll save is interest income taxes. So if you are a forex investor, yes, you get taxed twice, capital gains and interest income taxes. You're a passive investor, you're in mutual funds, you are in a REIT, you're doing subject to real estate, the BRRRR strategy. I personally have notes where I'm the paper on the house, people pay me their mortgage. You're doing seller financing or creative financing. You can be saving thousands of dollars. The third tax you'll save, dividend income taxes. If you're a stock market investor, you're a day trader, you're a commodities trader, an options trader, if you're living off of dividends, again, it's taxed between 10% to 37%, depending on your tax bracket. Fourth tax you'll save, rental income taxes. Yes, you can take depreciation. Yes, you can do cost averaging. But remember, your information is private and all lawsuits become frivolous. Think of how much time, worry, and money you'll save with the Spendthrift Trust. So I don't care if you're doing short-term, like Airbnb or vacation rentals, have 5 doors, 10 doors, 20 doors, apartment buildings, multifamily buildings, commercial property, or you're doing arbitrage. And the fifth tax you'll save is royalty income taxes. So if you're an author, an actor, maybe you have patents, copyrights, you're in the NFT world, you're an artist, you can be saving thousands of dollars. These are the 2 main trusts I sell. The other 3 trusts, so you know them, there's the charitable trust if you're a 501c3 company. There's the Senior Trust if you're over 65 and making too much money. It affects your Part B of Medicare. And then the Mineral Trust, Mineral Rights Trust. I only sold one of those. One of my clients inherited his granddad's horse farm in Oklahoma that has 6 oil wells on it. Again, I'm inviting any U.S. business owner making at least $80,000 a year, entrepreneur, 1099 income earner, or an investor to reach out to me to set up a 30-minute tax breakthrough session. And then you also can go out to my free class on the Great Discovery, www.sallygimmin.com. Thank you for watching. I hope you learned something new. Have a beautiful day. Take care.